Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. Well, I hope everybody had a great Easter weekend and now the markets are back open and we'll see how this week plays out. Now look, it's very fascinating to me that the day before the 3-day weekend is typically an up day about 85% of the time on the S&P. Now, we closed on Thursday, which was the day before the long weekend. We closed up 7 points. Nothing really exciting, but the day after the 3-day weekend is typically a down day about 85% of the time. Now, 15% of the time it will be an up day. We'll see how today plays out, but that's just fascinating to me. On 3-day weekends, that's a little stock market hack that you can play, but we'll see how that plays out. Now, my call here is that we're coming down and we're going to make a higher low. I think the recent low is going to hold. We're going to come down, make a higher low, retest that low, maybe even overshoot it a little bit, but I'm really thinking a higher low before they start to push this back up. You're going to get one more chance to get out at or close to the record highs. We'll see how that all plays out. Just my take. A lot of people have the take that we're going to free fall from here. That's a possibility, but that's not my take. I think that's a very slim possibility. I think they're going to push it up one more time. We're not in the bear market yet. The bear market's coming probably later in the year. We'll see how that all plays out. All right, let's get over to the real estate stuff. This is always so fascinating. It's so fascinating to me. There's a lot of real estate entities that are at war with each other right now, right? I mean, the MLS is at war with Redfin, with Zillow. It's like Redfin has now joined Zillow, that they're not going to allow private secret listings to be listed at a later time on the Redfin, on the Zillow. And now the MLS has also joined in, right? Okay, here's what Compass is doing. They hold their listings back. They hold them off the main market, right? I mean, we talked about this. If you missed it, go back and watch the other shows. But we talked about this. So they hold off their listings. About a third of their listings never make it onto the marketplace, right? They're sold by other Compass agents. If you're not working with a Compass agent, you never see the listing. Never on the MLS, never on Zillow. Well, Zillow, they're saying they're going to ban the Compass and the other companies, Keller Williams and all those, from having these private listings. They're going to ban the private listing, right? And Redfin joined in. They say they're going to ban the private listing that's marketed to the public privately. Now, does that include for sale by owners? Possibly. We don't know that yet. It starts next month, right? I mean, this is just, they're changing their rules, right? And they got their own platform. I get that. They should be able to control it. But the lawsuits that are going to come in, because really there's starting to be a housing discrimination there, right? I think there is. We'll see how the lawsuits play out. The recent one was really fascinating, right? So Compass, they hold their listings off of the MLS because they don't want other agents to be able to sell them, right? Because they want both ends. They want 3% on the sell side, 3% on the buy side. So they have a pocket listing, a secret listing, a private listing, an exclusive listing. There's so many names for these things, but you get the general idea. They're not putting them on the public marketplace. There's no transparency there. Well, here's what the Northwest MLS did. They kicked Compass off. They said, you're not going to put your listings on. That's a violation of our rules. So none of your listings can go on. Now, I'm sure they've resolved this. This was back on Thursday or whatever. They were fighting it out, right? Fighting it out. I'm sure Compass will be able to get their listings onto the MLS. We'll see how that is. Because Compass, they actually pay the MLS. I pay the MLS, and those fees are very expensive. People think we don't have any cost, but the MLS fee is a very expensive, along with the associations we have to belong to, the National Association, the State Association, the County Association. There's a lot of fees in being a realtor. And that's why you're seeing all the realtors go out of business right now, because last year 70% of real estate agents did not even sell one house or less, I guess it was, where 70% of the agents, and they can't even pay their fees. They don't have money to live and pay their fees. please. But anyways, it's a big tug of war out there between these companies. We'll see how the battle all plays. I'm just an independent broker. I work for myself. I don't work for a big company or anything. So my listings go on to the MLS immediately. Please bring me the buyers. I'm in favor of that, right? I don't like to go out and do my own marketing. The MLS will get that thing sold for me. Now, here's what's fascinating. Okay, so I just got this new listing, right? Well, I'm working on it. It's not mine yet, so that's not a done deal. It's a $3 million listing, right? Now, someone were to buy that, and let's say they had to get a loan for, I don't know, let's say they put $300,000 down, got a loan for $2.7 million to live in a 1,600 square foot tract home. Well, their payment to live in that would be about what, $20,000 a month? $20,000 a month. Now, there's another one for rent on the same street. You know what it rents for? About $5,000 a month, $5,500 to be exact. So do you want to pay $20,000 and get to say you're a homeowner, or do you want to rent the property for $5,000 and pocket $15,000 every month? Now, I know this is the most extreme I've ever even heard of, right? 25% of home ownership to rent a property. And that's why you know that we're in a bubble, right? We're in this huge, gigantic bubble. Now, a lot of people think that it's the interest rate, right? It is not the interest rate. 6, 7, 8%, that's all in the normal range, right? Now, here's where the problem came. Let me talk about where the problem started, who started the problem, and who we should blame for the problem, and who we should get rid of for the problem. See, the Federal Reserve is the one that started the problem, right? They lowered interest rates to 0%, 0%, kept them there for like 14 years at 0%. Did they not think that this might create a bubble? But that wasn't big enough for them. No. What else did they do? They went out and bought $3 trillion. Not billion, 3 trillion, not 1 trillion, not 2 trillion, 3 trillion. They went out and bought the mortgages, $3 trillion. You know that every mortgage that's in existence, 85% of them are backed by me and you, the taxpayer. We're responsible. Our little neck is on the line, and they're going to chop it off because these are going to start to drop like a rock. Now, here's why. Let's get into this, right? Okay, so you know you're in this big bubble when it costs 25% as much to rent as 100% to buy, right? So you're paying 1/4 what that person to buy does. Now, this is the thing. I get this question a lot. If you were a young person, Mike, well, okay, I'm not that young anymore. But if I was starting over, would I go out and buy a house? You know, I would not. Why? Because they're ridiculously unaffordable, right? And people say, but Mike, I got a family. I got to buy the house. Here's what I'd do, right? All right, we're just going to talk about my area, which is incredibly ridiculous, extreme. I'll even cut down half the price of my area. Let's say it's only a $10,000 a month payment, and let's say you could rent that place for $5,000. Would I buy that place for my family, or would I rent a same exact size house for my family and pocket that $5,000? But I wouldn't just pocket it. No. See, the $10,000 that guy paid, like you have a friend, right? You're jealous of him because he went and bought that house, right? Oh man, he's strapped. He's over 50% of his income, probably closer to 60% of his income is going to make that monthly payment, costing him about $10,000 a month. But you're sitting here in this beautiful home, same home he's got, $5,000 a month. But you can't say you're a homeowner. No, you cannot. You're a renter, right? No, a lot of people think renter is the devil's work. You got to be the owner, right? Not in this marketplace. I believe in real estate. When I was a young guy, I bought 1, 2, 3, 4 houses at a time, right? And this is what I'm going to teach you to do. But not now. Now's not the time, I'm telling you. What would I do if I was a young guy? I would go rent that place for $5,000 and I'd pocket that other $5,000. What would I do with that money I pocketed? I'd get it into real money as fast as I can. I'd be buying silver hand over fist, right? Silver's the bargain right now. $35 an ounce. People think I'm crazy when I talk about this. I think there's going to come a time when the reset happens. We're not that far away from where the system comes crashing down and the reset happens. I can't talk about that stuff on YouTube. But anyways, there's a reset coming. When that reset comes, my prediction, not financial advice, just Tall Mike's prediction. 500 ounces of silver will buy you the average price home. Now, your friend, he's out there struggling. 50 to 60% of his income is going to pay off that mortgage that he just bought that house for. And he's that proud homeowner, brings you over for the barbecue, right? You can have a barbecue at your place. You're a renter, right? But you're taking $5,000 a month. You're plowing it into silver. Oh my God, you're going to be owning 2, 3, 4 houses when the reset comes, and he's going to be losing 50% of his equity when the reset comes. It's going to get scary for him. You're going to be sitting back with a smile on your face. You got that big stockpile of the real money, the silver, the gold. You put your money into that. I'm telling you, that silver, you're going to be able to trade it for houses, right? Not just one house, though. You're going to have enough to get 2 or 3 houses, and he's going to be down 50%, and you're going to have those houses paid off. You're going to move out of the rental house into one of them, and you're going to have 2 houses that you rent out, and you're not going to have to work the rest of your life. Now, that guy that bought that house, he's still struggling. He's got to make that mortgage payment. Even though his house is down 50%, he's going to declare bankruptcy. I'm afraid that's what's going to happen to a lot of people. They're going to go BK. They're going to give the house back to the bank. Maybe you'll be buying his house, right? Because the banks, what they do, they dump them onto the market in a fire sale. But mark my words. You see, a lot of people blaming corporations, right? Corporations went out there. They bought all the houses. The only reason they bought all the houses, corporations, not the problem. The reason they bought all the houses is because the Fed gave them money at 0% interest rate to the corporation could get all the money they want. They didn't know what to do with it. They said, hey, I can make 4% on these houses as a rental. So I'm going to buy as many as I can. I'm going to borrow the money from the Fed, 0%. Then I'm going to buy these houses and get 4% return. I'm going to keep all that money. Well, guess what? The Fed has raised the rate up because it's now normalizing, right? So they got to pay 5%. Guess what? They're not buying houses anymore. Corporations are not the problem. Corporations are net seller right now. The corporations are what's going to cause this bubble to pop, going to be falling like a rock. And you do what you want to do. You get out there. Please, I need a buyer for that $3 million, 1,600 square foot tract home. Maybe you want to be the one buying it. Maybe. Or you can rent the one next door for $5,000 a month. You decide which way you want to play that game. But I do need a buyer for it, right? Because I want to get paid. Tall Mike likes to get paid. But the problem was not the corporations. Corporations would have never ended the market. Look, throughout the history of the housing market, corporations never ended the market till the Federal Reserve came in and lowered interest rates to 0%, which should have never happened. But you see, you got these Keynesian economics in there, economists in there, and they got to fiddle with everything. They can't let us have a recession. As soon as the recession comes, we got to print money. We got to lower that rate down to 0. That's the Keynesian style. Does not work. Creates these big bubbles, big bubble in the stock market, big bubble in the housing market, big bubble in the bond market. Everything's a big bubble, right? Except for 2 things. What are they? You could probably tell me gold is one, silver's the other. People say, but Mike, gold's expensive. It's at a record high. Gold is cheap, and yes, it is at a record high. Going to go much higher. I'm hoping for that pullback, but I don't know if it's going to be coming or not. It's really not for sure, but the Fed is the problem. You young people, when this comes crashing down, right? And when you get the pitchforks and you kick all these people out in Washington, when you rebuild the system, you get rid of the Federal Reserve and you never have a Fed again, and you won't have these problems. That's just my take, right? But the problem is right now is not the interest rate, 7%. That's pretty normal. Problem is that prices have gotten sky high because of the Federal Reserve in there buying all the mortgages, lowering the interest rate to 0 for 14 years. Yes, they created a bubble. Yes, I know you're locked in at 2.8%. And yes, I know you're going to stay there even though your next door neighbor's house is going to sell for half of what you owe on your mortgage. That's okay. You keep staying. You keep paying. We need that. We don't need the big crash. Real estate's my life. I make my living at real estate, right? But you see, the problem is that people don't make enough money to be able to afford to buy at these levels. Therefore, that something's going to adjust. Now, people think they're going to bring the rates back to 0. They bring them back to 0. You're just going to have the corporations in there buying them again, right? Because that's what happens when interest rates go to zero. Interest rates should not go to zero. And I think that mortgage rates are actually going to go 10, 12, 14%, but it's going to flush this out. You see, the Keynesian economists, they don't want this, right? I mean, they don't want to have a recession. Recessions are actually good. Gets rid of the bad business models. Some businesses aren't made to be in business. Gets rid of the people that can't afford to own a house, right? And it makes it affordable for the other hardworking people that can. Look, this is the problem right now. It's created by the Federal Reserve, but the corporations get blamed for this, and they are not the problem. It is the Federal Reserve. You give me all that money at 0% interest rates, I'll go buy 1,000 houses also, collect the 4% in rents, and sit back and be a fat cat. That's what happens when the Federal Reserve lowers it down to 0%. You got to kick them out. You got to get rid of them. Bring in the Austrian economists. They know what to do because they believe in the free markets, right? The supply and demand curves. They believe in it. Things will adjust. There'll be price discovery. There is no way in the world that this house I'm selling is 1,600 square feet is worth $3 million. Tops half that, probably closer to $1 million. But there's no price discovery, right? As long as the Federal Reserve's in there tinkering with it, lowering rates back to zero, printing money, 10, 20 trillion dollars, 30, 40, 50 trillion dollars. There's no stopping. We got to get rid of them. It's just my take. I got carried away, didn't I? Anyways, you guys get out there. Have a great day. Give me the thumbs up first. Enjoy your day, everybody. Bye-bye now.